Well, it's good to see so many familiar faces and new faces. Like Bob said, we've been doing this for 9 years, and if you can imagine what we've gone through over the past 9 years, we've gone through the financial crisis. This region certainly has gone through the shale boom. Suddenly we're looking at a much different oil industry today than we did just 18 to 24 months ago. So a lot of interesting things have been happening since we've started this event. And as you'll see in this presentation, the world is certainly changing rapidly. There are a lot of economic and political issues and developments which are impacting businesses all around the world and businesses right here in Ohio. So let's, without any further ado, let's get started. First of all, ISA, if you're new here, I saw there were some new faces here. We are a economic and political research firm. We publish economic and political risk country forecast for over 180 countries. We also do advisory services for companies, governments, universities around the world. I won't get into too much about that because we have a lot to talk about today about what's happening in the world. And the structure is not going to change. If you've been here for 9 years, you know this is the same structure. We're going to first look back at the past year. Why are we today where we are? So we're going to look back at some of the key economic and political developments in 2015. We're going to look at some of the key issues and trends in 2016. We have a little special section today on China and India. Typically, if you remember, we try to add a few slides on a specific topic. This year's topic is China and India and the impact that those two countries are having on the global economy. And then, as you know, we go region by region around the world to see just what's happening around the world. And then we'll touch on a couple long-term issues and trends. And then, time permitting, and there always is time, we'll do a Q&A. And you can ask me whatever you'd like. So what have been some of the key developments over the past year that are really impacting the world? The key one on many people's mind is what's happening in China. There's a lot of uncertainty in China. The economy there has slowed down. The markets have gone crazy in China, and we're going to discuss why that is in just a little bit. The situation in the Middle East and North Africa has not improved. I mean, we've talked about this since the beginning of these discussions 9 years ago. The situation in that region has continued to deteriorate, and it's having an ever greater impact on global security and on the global economy. Something that hits home very much here, the fall of commodity prices. We're going to touch on that in more detail as we go through the presentation, but that's certainly something that, while was expected, the depths that we've reached, particularly with the price of oil, was something that almost nobody could have predicted. We'll talk a little bit about Europe's migration crisis. This is having a huge impact in Europe. And then just what we're going to start off now is with the global economies continuing to disappoint. This is the same slide we've started all these presentations with. It shows on that chart there the global economic growth rate. Now for 4 consecutive years, as you can see, the global economy has grown at just a little more than 3%. Now, in the days before the financial crisis, we were talking about 5% and 6% global economic growth rates, and a lot of companies and exporters got used to those kind of numbers. Well, those numbers haven't come back. We had no growth in 2009, a bounce back 2010, but growth has really stagnated since then. And why is that? Well, first of all, the developed economies in the world, the recoveries in Europe, in North America, in Japan have been very sluggish. I mean, we here in the United States are nowhere near the growth rates that we were at pre-crisis, or certainly 1990s levels. Europe is a much worse situation. And then the emerging markets, and we'll talk about that. A lot of the post-crisis growth was driven by emerging markets, but that's no longer the case. A lot of the growth that was being driven by emerging markets just a couple of years ago is completely dissipated, particularly outside of Asia. So what about the United States? A little bit stronger growth in the United States in 2015, but still disappointing. This chart shows 10 years of growth below 3%. There hasn't been a GDP growth rate, an annual GDP growth rate in the United States that's reached 3% in 10 years. That has never happened in the history of the United States since we were an independent country. We've never had one decade where we didn't reach 3% GDP growth. That's why many people are not feeling that there's a recovery. Yes, growth rates are higher than they were, and yes, we're growing faster than Europe and Japan and many other economies, but that makes us look like the best player on the Philadelphia 76ers. Everybody's losing. You might be scoring the most points, but you're still losing by 25 points every day. And that's kind of how it is here in the United States. There is a recovery, and when we look at our neighbors, yes, we're doing better than most of them, but it's not a robust recovery. We're not generating the type of growth that was driven, 15, 20, 25 years ago. And you can blame the last two presidents. I mean, this is obviously it's an election year here in the United States. Partisan feelings are strong. Our last two presidents have recorded the lowest GDP growth rates during their terms since Herbert Hoover, who had the unfortunate distinction of being the president during the onset of the Great Depression. So both Bush and Obama have recorded the lowest growth rates since the late 1920s, early 1930s. Situation is worse in Europe. You look at these growth rates over there in Europe. The Eurozone, those are the economies in Europe that use the euro as their currency, over the last 15 years have grown by an average of just 1% per year. I mean, almost no growth being recorded in continental Europe. A few economies have done better. Britain certainly has had a better run of it the last couple of years. Spain enacted reforms. They're starting to grow. But too many economies in Europe continue to record little or no growth. France, almost no growth. Italy's economy today is smaller than it was in 1999. 16 years ago. There's less economic output in Italy today than there was then. Other developed economies also have been struggling. Canada, for example, has been hit very hard by the fall in oil prices. A lot of the growth in Canada in recent years was driven by the oil sands in Alberta. The fall in oil price makes that very unprofitable. Australia likewise seen lower growth. And then Japan. Japan being the big one here, economic growth rates of about 0.6% this year. The Japanese economy since 1992 has averaged just 1% growth per year. So if we look around the developed world, the rich countries of the world, there's almost no growth being generated, and there has been almost no growth being generated for a very long period of time. A lot of that has to do with demographics. These are aging societies with low birth rates where the working age and consuming age populations are shrinking. In terms of new world economies, places like the United States, Canada, Australia, that's not such it's not having as big of an impact because there is more immigration and because the birth rate is slightly higher. But nevertheless, across the developed world, we have been in a prolonged period of stagnation with very little growth being generated. So what about China? China has been on everybody's mind in recent years, and certainly in recent months. Economic growth in China fell to below 7% in the second half of last year. Now that is the official economic growth rate in China, which is not the real economic growth rate in China. A lot of people assume the Chinese government is simply inflating growth numbers. That's not the case. I've said this before. They're smoothing growth numbers. There have been cases in the past where the Chinese government would actually report a lower rate of growth than what actually occurred. The Chinese government wants to show that they are in charge of the economy, that there are not the huge peaks and valleys that you see in other major economies around the world. So this year they inflated the growth rate. There's no doubt about that. Most economists believe the Chinese economy grew somewhere between 3 and 5% in 2015, not the 6.9% that is the official rate. If you look at things like electricity usage, steel production, freight traffic, you can kind of get a better picture for just how much the Chinese economy is going. So what's happening in China? Well, China is rebalancing. China is rebalancing away from an economy that was dependent upon manufactured exports and investment from the government to one that's increasingly being driven by consumer spending. It's a middle-income country now. It is not a poor, low labor cost manufacturing economy. It is increasingly a more mature middle-income economy, and consumer spending is a bigger driver of growth than ever in China. And consumer spending is still rising in China. It rose by 11% in the fourth quarter of last year. So consumers in China have a lot of money and they're still spending. It's the export manufacturers, or the export-oriented manufacturers, who are struggling in China. And why is the market reacting like this? Because there's so much uncertainty. You have this massive economic transformation coupled with the fact that the economic data coming out of China is not, let's say, very well respected and very well understood. So this is causing a lot of volatility on the Chinese market. And you can see on the chart up in the upper right that share prices have gone up and down dramatically over the last 12 months in China. The fastest growing large economy in the world is now India. I mean, if you've seen, you remember previous years, China consistently outgrows India. It's been doing it for decades. Well, this year, the Indian economy has finally overtaken China. It'll grow at about 7.5% in 2015, last year, excuse me. So it beat China by a small amount. Now, of course, there's a couple caveats there. They also have recalculated how they measure GDP growth, and nobody really understands it. So there is some question about the accuracy of the data. At the same time, the Indian population is growing rapidly. The Chinese population is growing growth is almost stopped in China in terms of population. But in India, it's still growing rapidly. So you need a higher rate of growth to draw more people out of poverty. And of course, in India, they haven't been able to achieve that 10% kind of growth that China was able to do because of its manufacturing exports. So far, India has not attracted that type of investment, and it remains to be seen if it will. We'll talk a little bit more about India later on. So China and India, you hear that? 6.9% growth, 7.5% growth? That's not so bad, and it's certainly not. They're outpacing the rest of the world. The rest of the world's emerging markets, particularly those outside of East Asia, have really struggled. This chart there shows what we call the struggling emerging markets. Look at those growth rates in 2015. If you remember, 4 or 5 years ago, this presentation, some of these economies were growing at 8 and 9%. Certainly Turkey was, Nigeria was. There was a lot higher rates of growth. These economies have all slowed significantly in recent years. And there's a number of reasons for that. There's a lack of export competitiveness. There is investors have pulled a lot of money out of these economies. But these economies are actually doing better than these economies. And some of the biggest emerging markets are here. These are what we call the collapsing emerging markets. All 4 of these countries have had terrible years over the past year. Brazil, you're probably pretty aware of the situation in Brazil. They're in the middle of a very deep recession. The economy is going to shrink at least by 3% last year. That recession is going to continue this year. And now we have this Zika outbreak, which is probably going to have a big impact on the tourist sector there. It's a terrible time in Brazil right now. If we talk about politics, their president, Dilma Rousseff, her approval rating right now is 9%. 9%. So if you think the Republicans don't like President Obama or the Democrats didn't like his predecessor, 9% across the board approval rating. That's rather incredible. And this was a country that just 5 years ago was talking about matching China in terms of growth over the long term. That situation's changed dramatically. Russia, the situation's even worse. They've been hit very hard by 2 things. One is the fall in the price of oil and other commodities, and the other is the fact that international sanctions have been on Russia for some time now. So the Russian economy is having a terrible year. Ukraine, which is tied to Russia because of that the conflict, which is now kind of it's kind of just a cold war now in eastern Ukraine. The Ukrainian economy shrank dramatically last year. And the other economy is Venezuela. Venezuela is probably the worst managed economy in the world. It's taken that title from Zimbabwe. It is the Cleveland Browns of economies. Venezuela was once the richest country in Latin America. 30 years ago, Venezuelans had a very high standard of living. They had the oil wealth, of course, was the driver of that, but it was a very advanced economy, and things have just fallen. Their economy this year is forecast to shrink by up to 10% on top of all of this other declines that they've had. So really, really bad days there. So typically, and when we started doing this event, global foreign trade and foreign investment levels typically were in excess of global economic growth rates. Even when the global economy was growing almost 6%, foreign trade was growing at a faster clip. Investment was growing at a faster clip. That's no longer the case. Look at those foreign trade growth rates. They're just in line with the economy. And what's even worse, foreign investment levels are still well below where they were before the financial crisis. So that speaks to a lack of confidence right now in the global economy, particularly on the investment side. Investors are hesitant to invest outside of their borders right now, even though, for example, China is sitting on huge amounts of foreign reserves. The US dollar is very strong right now, so US companies, what you would think, would be very aggressive in foreign markets. That has not manifested itself just yet. Commodity prices keep falling. This chart's already outdated. You know where the oil price is now. This is something that's had a huge impact around the world. There are so many economies that have been dependent upon the high price of oil and other natural resources for their growth. That has come to an end. I'll talk a little more detail about the outlook for oil prices when we get into the 2016 and beyond section. But the key driver has been the fact that Chinese demand levels just are not where anybody expected. Now, everyone talks about the supply side, and supplies are high for oil and many other natural resources. But that's because everybody expected demand levels in China and other emerging markets to be much, much higher than they are now. So all this investment went into boosting supply, and the demand levels just didn't meet the expectations that the investors had. This has been a big issue for anyone who's an exporter here. The US dollar remains strong. I mean, that chart there shows the change from the US dollar against other currencies over the past 2 years. And you can see the US dollar is the strongest large currency in the world. The Chinese yuan, by But even with recent devaluations, it's still rather strong. The Indian rupee has been strong, but a lot of our key trading partners have seen major devaluations in their currency. The Canadian dollar is about a quarter below where it was 2 years ago. The Mexican peso almost 30% below where it was. Countries like Brazil, the currencies have fallen sharply. So this has had a huge impact on export competitiveness here in the United States. We talked a few years ago about a manufacturing renaissance here in the US. This is holding that back. This is really making manufacturing here in the US not very competitive, and it's holding back what had been seen to be a renaissance in the manufacturing sector. The situation in the Middle East and North Africa is worse than it has been at any time in recent memory, and it's been bad before. But that map shows that there are wars and insurgencies across the entire region. We have 4 civil wars raging right now in Libya, Yemen, Syria, and Iraq. We have insurgencies across the region, the potential for more conflict. We have a Saudi-Iranian standoff, which is growing in intensity. This is a volatile region which is starting now to have an impact not just on the people who live there, but on other regions. And we see in Europe, for example, 1.1 million people crossed into Europe last year. 250. We had a slide, I think, last year where there were 200. We talked about how there were 250,000 people crossed into Europe, and that could double in 2015. Well, it didn't double; it more than quadrupled. 1.1 million people crossed into Europe last year. Now there are estimates of anywhere between 1.5 and 4 million people fleeing those conflicts I showed you on the slide before, trying to get into Europe. And Europe has, as we've seen, its own economic and social problems. How are they going to deal with this influx of humanity? It really remains to be seen. I spent a lot of time in Europe, and it's very visible. If you're in a German town, Germany's main minority group was Turkish, so you'd see a lot of Turkish people, but suddenly hear a lot of Arabic, which you never heard before. The Arabic-speaking minority lived in France and in Belgium and other countries, but you see huge numbers now in Germany where they weren't 12 months ago. And so we could be looking at 3 or 4 times as many people trying to cross the Mediterranean Sea next year. I won't get into too much in the Asian border disputes. This is really a long-term issue that we've mentioned. The South China Sea bears watching. It is the one flashpoint where the United States and China come face to face. And we've seen with China building air bases on disputed islands there now and us sending planes over those disputed islands, just how high tensions can get in that region. There weren't too many key elections. In 2014, more people in the world voted than ever before. 2015 was the year where some people just couldn't get enough votes. The people in Turkey had 2 elections because they elected a government. Well, they had an election. They couldn't form a government. They elected again. The Greeks wanted to vote so much they had 3 elections last year. And this is something that is a trend, and we'll talk about it a bit later, but the fragmentation of politics. If you're in a parliamentary system and you're getting more populist parties on the right, more populist parties on the left, adding to the already existing parties that are in place, you end up with elections that result in hung parliaments where you can't form governments. And we see here this year in the United States, we'll talk a little bit about that later, but this division within politics, that the mainstream parties or the mainstream of the major parties no longer have all the sway in these elections. So key takeaways from last year: China's rebalancing is continuing, the slowdown is continuing, it's causing some unsettled investors around the world. Failed states are popping up all around the world. This is a very dangerous development, particularly in the Middle East and North Africa. Many emerging markets are struggling. A few years ago, a lot of our growth was being driven by these emerging markets. Today, they're not contributing any growth. China and Russia becoming more assertive, and growth ceilings falling for many developed economies. It seems to be we're getting to a point where the developed world just can't generate the type of growth that we achieved a few years ago. And that the growth ceiling here in the United States might have fallen to 3%, whereas it was 4% just 10 years ago. The growth ceiling in Europe might just be around 2% now, whereas it could have been 3%. So this really has an impact on long-term growth opportunities in such markets.